Well, thanks again for joining us for another video session. It's Friday afternoon, and Dan, already been a pretty eventful sort of a day.
Down 77 as we speak, Michael. So the market's coming off, isn't it? Well, there goes yesterday's gains anyway.
Absolutely. It's been extremely choppy over the last month or so, really, hasn't it?
Yeah, very rangy, isn't it? You know, it's not sort of busting either way. It's just hanging in that range at the moment, the markets.
No, it is, yeah. No, certainly just a pure fire sign that really, it's a day-by-day process. No one's sort of too keen to commit to any decision either way on the short or the long side. But of course, yeah, what's really dragging us down today, announcement that OPEC is going to maintain their oil supply, 30 million barrels a day, where basically the thought is, of course, we've got a glut of oil around the place. So energy shares are getting absolutely poleaxed today. Santos, Woodside, Origin, AWE, Cenex, Oil Search,
yep.
all under the pump, 6 to 10% at the moment. So
it's interesting to see who have been the winners, though, Michael. Like Qantas, Toll, yeah. I was reading a stat there that Qantas, some 30 billion barrels of oil, or 30 million barrels of oil a year at $50 a barrel, less than what they were paying last 12 months.
Yeah, it's got to add enormous amounts back to their bottom line, hasn't it, for sure? And of course, that's been one of the hindrances for Qantas. Joyce has often come out and said it's the oil price that's been a major factor for them, or, you know, working against them, of course. But yeah, certainly now that they should see some benefits flow through from that lower price.
Wouldn't you? They've got to have a win somewhere, don't they?
Absolutely. It has been very tough, but and of course, Dan, too, we were saying that, you know, lower oil prices being deflationary, it's almost like a quasi interest rate cut.
It is, isn't it?
To some degree.
Yeah, and that might change the economist's thought too. You know, a few of them have been calling for lower rates, haven't they? So, you know, they've got to take that into consideration as well now.
Yeah, absolutely. We're in that sort of strange scenario, aren't we, where inflation is quite low. However, we've got sort of pressure on unemployment and also, you know, high housing prices. So the RBA is in a tricky position where, on one hand, they could, you know, sit on the fence and keep rates flat. But certainly, I'm sure that this property market is starting to cause them a bit of concern.
Yeah. I think you'd be happy for his Christmas holidays, Governor Stevens.
Absolutely right. Yeah, no, but an extraordinary period of time of now of flat interest rates. You know,
and on that, Michael, the banks on Monday will be interesting, won't they?
That's right, Dan. Yeah, Murray coming out with his thoughts and suggestions for the financial services and banking sector. You know, of course, you've mentioned, Dan, last time, capital requirements are looking like they'll be edged up. So you know, that will affect the banks somewhat. Banks are pretty good.
It'll bring their yield down a bit, Michael, won't it?
Yeah.
I see today NAB's on yesterday's close at around 6.2%, Westpac at 5.6%, so the yields are pretty good. So, you know, you'd have to think about it again if the values come off or the prices come off a bit more, hey?
Oh, very true, and that's it. And those sorts of yields compared to TD rates, money in the bank, you know, it's just head and shoulders.
It is, isn't it? No comparison.
And add a few franking credits on top, and you even, you know,
looks really
emphasise the benefits. So, but no, another busy week ahead, no doubt about it. Reserve
Not
Bank.
For you though, you bludger.
Yeah, Monday and Tuesday off next week, so I'll be sunning myself down in Brunswick Head. So looking forward to that. But yeah, no, it's going to be a pretty bouncy old week ahead by the look of it.
I think you're right.
But yeah, as you say, Dan, there's still a lot of good value out there. Some of these yield stocks still looking very attractive. Woolworths is probably still one that is of focus, looking much better value than it was a few weeks ago.
Interesting whether we can actually pick that up for under $30. I see it's off again today. So.
It is, and of course stocks don't become cheap for no reason, do they? There's always a reason, and Woolies has been in the news for all the wrong reasons, of course.
They've got to sort masters, don't they? It's a real drag on them at the moment.
They do, exactly right, and like the energy stocks today, of course, you know, they are low for a reason, but, you know, again, maybe an opportunity to top up Santos, Woodside, Origin.
Well, if Santos can get that LNG plant up and running this year, you know, could put a bit of a spike under them again too. Absolutely, so.
Yeah, absolutely. And, you know, free cash flow expected to be generated next year from the Papua New Guinea LNG, which is up online and producing. So,
and on saying that, you know, Oil Search have a big holding in that. So
yeah, very true. No, I'd agree. I think Oil Search, Santos are still ones to keep a close eye on, and Woolworths, in that more defensive sort of supermarket, food and liquor chain.
Very good. Thank you, Michael.
Yeah, thank you, Dan. Thanks for joining us. We'll see you next time.